from 11FS. This is Fintech Insider News, and I'm your host, Ross Gallagher, Ventures Director at 11FS. Thanks for downloading this podcast. If you like what you hear, why not recommend it to a friend? This week, we're talking Google's parent company Alphabet could be buying a £300 million stake in Monzo. What does this tell us about where investment is at in the fintech industry right now? Revolut bring bond trading to their European customers, alongside everything else. And The Rock has created a new metal debit card called Mighty Oak. Well, we'll see what the panel thinks about this one. Some mixed views. We get into all this and much more in today's show, back after these messages.
Hello, it's Benjamin here, Director of Research and Strategy at 11FS. Earlier this year, we published Building the Future of Home Buying, a report that calls out financial services for making the biggest, most significant purchase of most people's lives way more difficult than it needs to be. Well, fast forward to today and things haven't changed. Mortgage offerings are more important now than they have ever been, with sky-high interest rates in many countries forcing homebuyers to shop around. We've got clients asking us how to move quickly to fix the problem and get a game-changing product to market. Want to know the secret? Step 1, download the report at 11fs.com/homebuying. Step 2, get in touch at 11fs.com/ventures. Speak soon. Hello and welcome,
LFG people,
to Fintech Insider,
Blockchain Insider, 11FS Spotlight,
11FS Explores,
Open Mic Night,
After Dark.
Through our podcasts, videos, newsletters, and live events, we have a direct line to a truly global fintech community. So if you're looking to sponsor and collaborate on content that connects with everybody from fintech beginners to the biggest VCs, then chat to our team at sponsors@11fs.com or visit 11fs.com to find out more.
Long live the community.
Hello and welcome to episode 806 of Fintech Insider. I'm Ross Gallagher, Ventures Director here at 11FS, and I'm joined this week on Fintech Insider News by some great guests who are here to break down the week's biggest stories in fintech and financial services. Firstly, it's a big hello to my wonderful co-host, Rachel Pandyan, Ventures Product Lead here at 11FS. Rachel, great to have you back. A familiar voice, I think, now for our listeners on the podcast. How are you doing?
I'm doing well, thank you. Very excited to be here. Very excited to be referred to as familiar now. I think we're going to make this a regular thing. And super excited to talk about some of the topics today, especially a little bit about open banking.
Yeah, excellent. I think we'll definitely be making it a regular thing. Super. All right. Well, look, we're also pleased to welcome Iana Dimitrova, CEO of OpenPayd. Iana, look, thank you for jumping on, for joining us. Maybe you can just tell us, by way of introduction, just a little bit more about yourself and what you guys are up to at OpenPayd.
Ross, thank you for having me and OpenPayd on Fintech Insider today. It's an absolute pleasure to be here. There is so much that's happened in the last couple of weeks that I don't think that the next hour will be enough to cover it all. OpenPayd is a B2B banking as a service provider. We focus on giving businesses infrastructure to build better payments experiences, embedded account and embedded payments experiences.
Amazing. And some sort of open banking specific stories that we've got as we go through the news as well, Iana. So thank you for jumping on and sharing your insight, your expertise. And then last but not least, a big Fintech Insider hello to Ralph Rogge, CEO at Crezco. So Ralph, we're delighted to have you with us. I know we'll be talking a little bit more about your news specifically with Crezco shortly, but maybe again, you can just give our listeners a little bit of an overview around you and what you do.
Hi, yes, thank you very much. Lovely to be here. I'm the CEO at Crezco. On a day-to-day basis, I'm still not sure what I do, but the company itself is designed to sort of solve financial pain points for SMEs. Those are the long tails. And we do that particularly via leveraging open banking to help with bill payments, salary payments, and invoice payments.
I think those are the best roles, aren't they? When you can't sum up what you do in a single sentence. That's when you know you're doing some really exciting stuff.
Well, the way I define a CEO is you are the person that is ultimately to be blamed for everything. So when things go wrong, it's all you. When things go well, it's all your team. So Ralph, feel free to use that one in the future.
I think I heard that on a YC Combinator speech.
No, I love that. All right, look, I can already tell we're going to have some fun. So let's jump into the show. We'll get stuck into the news. Our first story comes from investing.com with a headline, Google parent company Alphabet in talks to seize major stake in UK challenger Monzo. So the investment, which is expected to be at least £300 million, is being funded by Alphabet's growth fund Capital G. If finalised, it would boost Monzo's valuation to £4 billion. Monzo is now reportedly the 8th largest bank in the UK, with a staggering 8.5 million customers. The news follows Monzo's recent decision to set up a UK holding company. Speculation is now rife that Monzo is planning to launch an IPO in the near future. So, Rach, maybe I'll come to you first on this one. I mean, this one got a lot of attention, definitely got a lot of column inches. It feels big. Is it big?
I think it is. I think, I was looking into Capital G and some of the investments they've made. We're talking about Airbnb, we're talking about Stripe, usually just before they went public. And so I think with Monzo's intentions to go public, I'm not surprised Google is like sniffing around. I think Monzo have shown a great track record and show an amazing track record going forwards. I think it is particularly interesting as Monzo are thinking about their international expansion, trying to re-enter the US. I feel like this could be a really nice opportunity for them to do a lot of investment because while they're teetering around profitability now, it took a long time for them to get there and a lot of investment. And so this investment feels like it's the right step for them to be able to do something amazing in the US without relying on some of their other revenue generating products that they've managed to get through in the UK.
Yeah, I completely agree. I think it's been an interesting time for just the fintech sector generally, hasn't it? We've seen the absolute gold rush, I suppose, of VC investment that we've seen over the last decade really dry up. But I think I saw somewhere this week that the rumors of fintech's demise were sort of very much overstated. Iana, what do you think? This is it a signal that investors are really starting to look at this space again, or is Monzo a bit of an anomaly maybe?
I think it's a really interesting one because you are absolutely right. We've now come to the end of free capital, free money, and personally I welcome that very much. I believe it is a very good development. Now, if you look at the timing of the investment, first of all, obviously historically Monzo has been loss making for a really long time, but this year they're now set to get to profitability. So the timing of that investment is really interesting. I think the timing reinforces that, drive or U-turn to the business fundamentals. If in the last few years, VCs were chasing growth at all cost and no one was really asking any questions about profitability, we have now seen over the last 12 months a definite shift towards capital efficiency and towards profitability. So the first thing to really note here is, yes, it is a significant investment, but it comes at a time when there is a very clear path and a short path to profitability. So that's the first thing. The second thing is the fact that it's coming from Google, I think only reinforces the fact that fintechs are under threat. And the reason why I'm saying this is because if you think about the opportunities in front of fintechs in the absence of VC capital, you have the big banks on the one hand, and you have the big tech on the other hand that are almost coming to take our lunch, right? And I think that is a very clear signal that big tech is making greater and greater inroads within the fintech space very successfully. And I think this will only put more pressure, especially on the smaller fintech providers, on the ones that have the opportunity potentially to innovate, because it's incredibly difficult to actually compete against this. And finally, I would say that the raise definitely does come across as opportunistic, but in a good way, because given the success that Monzo has had in the UK, it only makes sense to go international. It only makes sense to be bold and to try and re-enter the US market. So I think overall this is a good signal for the industry, but also one where anyone in fintech in a scale up needs to be mindful of in terms of the threats coming from big tech.
I have a slightly different theory. I always get slightly nervous when fintechs try to enter the US. it somewhat reminds me of successful European dictators entering Russia. So we think about Napoleon or Hitler, they tend to be doing rather well. And then they think they can take on Russia, and it seems to be the demise of them. And I always wonder why a UK fintech thinks that they're going to succeed in the US, particularly when the US has all the local knowledge, all the local financial capital, and all the local human capital, that I wonder, like, what is the competitive advantage? So I imagine that Capital G has just made a very calculated portfolio bet that Monzo is a good investment, regardless of sort of international growth opportunities. Banks have really struggled to grow internationally, and I'm sure we'll talk about that from a regulatory perspective. But my bet as a betting person is that it's going to be a very passive investment by Capital G.
Yeah, I think I definitely agree. I don't think that Alphabet have invested because of the international expansion. But then when we think from Monzo's perspective, and also I am super interested to see how they perform in the US, or, you know, if they go there, because they've been there before and they failed. They went very early on. They didn't understand the market, exactly to your point, and the amount of investment that is required to launch a new venture in a new country, be it the US, be it anywhere else, is huge. And so I wonder if perhaps this investment is the catalyst for them to be able to do it well from Monzo's side, versus from a investment perspective, Monzo doing very well, launching all these revenue generating products. It makes sense. Increase the valuation for a company that is actually, you know, it's a profitable company, like you said, Iana. So I think it's the two angles there. One is they're a good bet, Monzo, right now. They, you know, from a fintech or neobank that no one looked like into a fintech or 8th largest bank, they're a real contender. But from a Monzo perspective, where do they go now? They have these revenue generating products in the UK. They're starting to become a business. They're starting to assume customer numbers. There's only so much they can do beyond just acquire more people in the UK. What does that look like for them to grow as a business? And I think that's where international becomes kind of interesting for them.
Yeah, but that scale play, I think Ralph, you raise a really interesting point, has historically been incredibly difficult, right? I mean, we've seen N26 try to potentially sort of walk before they could crawl, right? We saw them, you know, come into the UK, then pull out of the UK, go into LATAM, within 12 months, you know, announce that they're going to come out of LATAM. Even where we've seen fintechs be successful with that move internationally, like a Clio, they then had to shutter the UK business so that they could actually focus all of their efforts on the US, which was going really well. There are obvious exceptions. I think Revolut is a really good example of someone that's done it well. But I think the point that Rach and Iana, I know you've both sort of made about they have historically been loss making, Monzo, right? They lost 116 million in the year to the end of February. However, they announced in their most recent set of financial results, they are now profitable on a monthly basis. They're targeting profitability by the end of the year, Iana, I think, which was your point in terms of maybe, you know, that being a very attractive reason for Alphabet wanting to invest. I also agree with the point, Ralph, that I think this is actually very much a passive sort of indirect investment. I don't think we're necessarily going to see anything in market. Sorry, Iana, come on in.
I think perhaps to slightly disagree with Ralph there. I think you're absolutely right in the sense that this is a very good investment, financial investment anyhow. But I think the fact that the investment comes from Capital G is very interesting in the context of that international expansion. So when we think about Google's strategy in payments and generally Google Pay's strength revolving around their ability to leverage a large group of customers, when you couple that with that ambition to go international, to go to the US, I think it becomes very interesting. If it was a 300, 500 million investment from any private equity or VC firm, I would absolutely agree with Ralph. But I think having the ability to tap into that massive user base that Capital G is bringing with Alphabet is I believe very interesting and definitely a very important piece of the jigsaw to succeed in a new market.
Have Capital G done that with any of their other portfolio companies? I'm not sure they have. I think banks are incredibly domestic, and last year everybody celebrated sort of the Chase Bank app, and it came from one of the largest banks in the world with $100 billion market cap, run by Jamie Dimon. It cost them hundreds of millions of pounds, and they just launched an app that was like every other iOS app we've had for the last 10 years.
But with a really nice financial hook, right? to get people in there.
Exactly. If I was Alphabet, I'd be far more excited in the moonshot projects and just see this as a VC investment.
But even your point about Chase, I think, raises an interesting one when we come back to that point about scale, right? Because actually, if you contrast that with the fortunes of Goldman, who've tried to move into that retail space and have subsequently, of course, had to come out because they can't make it work. So this isn't just fintechs. But Ralph, one thing I'd be keen to get your thoughts on before we wrap up this segment. It's not too long ago that actually a lot of the headlines around Monzo were quite negative, right? They were being investigated for potential sort of anti-money laundering, fin crime breaches, all of that sort of stuff. But I suppose a couple of years in financial services with the disruption we've seen is a long time. Obviously, this is a much more positive slant. Do you agree with what a lot of the position that a lot of these articles are taking, which is this seems to be them setting up for an IPO in the near future?
I wouldn't have enough information. I think in order to IPO, you're going to have a bunch of investment banks that are going to need to underwrite it from it'll be driven from a profitable, purely accounting perspective. I would imagine as a bank. I would need to see the accounts more carefully.
Yeah, no, I completely agree. Again, I think it's worth nodding to only because, again, I think we've seen a really, really rapid shift away from that sort of scale at all costs as that VC investment has dried up, and to the point we've made, I think, throughout this story, towards that sort of like profitability, strong business fundamentals, and I think to even be talking about a potential IPO at this stage for someone like Monzo, I think is really exciting, and actually probably a good indication as to where the market is ultimately at right now. All right, then. I am going to move us on to our next story. This one comes from TechCrunch with a headline, Crezco raises £12 million and partners with New Zealand tech firm Xero. So Crezco are a UK fintech company using open banking to make B2B invoice and bill payments as convenient as B2C card payments. Their latest funding round, led by MMC Ventures, will be used to accelerate growth. Additionally, Crezco also announced a technology partnership with Xero, who will be the first major small business cloud accounting software in the UK to offer on-platform bill payments using open banking. Crezco and Xero hope that this new partnership will enable small businesses in the UK a simpler and more secure solution to approve and pay bills. Now, obviously, we could read out the press release, but luckily we don't have to because Ralph is with us, Crezco's CEO. So, Ralph, maybe you can just tell us a little bit more, I suppose, around the background to this one, sort of how it came to pass.
Sure. So it's equity investment from MMC and 13 Books Capital, which is designed to enhance our sort of product development and support this partnership with Xero. For those that aren't aware, Xero is sort of one of the largest, fastest growing accountancy software companies for small businesses. It's often it's the accounting software that they'll choose when they first establish a business. And these are our target audience. And the real kind of key is we use open banking, and a lot of people think of open banking as a sort of form of collecting payments to compete with Stripe or iSettle or something of that nature. And open banking is an account-to-account solution, so you don't need to pay the card schemes and you bypass Visa and Mastercard. And it does do these things, but it also does provide a better user experience. And for us, it's about actually helping the SME pay their bills, not just collect their payments. And it's a really simple, intuitive product. And we've just been able to put a Pay Now button within the Xero platform, so they can pay all their bills at once instead of having to sort of download a CSV file and upload it elsewhere. And it's really obvious, and it wasn't technologically, it wasn't possible yesterday until the introduction of open banking, because all the sort of innovation we've seen in the payment space has just been focused on improving the user experience of a card schemes. Stripe was a better WorldPay and iSettle was a better First Data terminal, but they still ran through the card schemes networks, and they were still about collecting payments from people who had cards. Whereas open banking can compete there, but it can also provide an alternative solution. And for us, it's about embedding a bill payment or invoice payment so you can help pay your staff, your suppliers, and I think we're sort of at ground zero here, and it's a new product that wasn't there yesterday because the technological capabilities weren't around. So that's why it's very cool.
It's I think that point about it being on platform, and to your point, that really intuitive user journey, just starting with like a pay now button, sounds so simple, and it's actually quite stark that wasn't there before. The process, as you say, quite rightly, was incredibly labor intensive. And I think one of the really nice things about this, and I hope you'll agree with me, is that it lifts some of that sort of manual labor burden from these SMEs and actually gives them the time back to focus on running the business ultimately, which is what they really want to do, right?
Exactly. They're really busy, these small businesses. A lot of them would even have financial directors. They're all chasing sales. They're worried about their warehouses, what's going on with their inventory. But inevitably, they do have to pay their suppliers. You have costs. And the question is, how do you pay those costs? And are you going to log into your bank and input those bills manually or upload a CSV file? Or are you just going to put a pay now button on your accountancy software where those costs have to be recorded because you have to file your accounts? So it's really just bringing that convenience. Could you imagine buying something on an e-commerce site where you weren't capable of putting in your card details? Now you've essentially got that convenience when it comes to paying your suppliers.
I was going to say, this is I was reading about the investment and huge congratulations to you and the team, but it is what SMEs have been crying out for, their biggest job to be done. All of the B2B work that I've done has been around cash flow, help me understand my cash flow and make it easier for me. And people are trying to think about really complicated, and we'll aggregate everything in and we'll do this and we'll do that. And it's just about quick and simple hacks that make it easier for SMEs. And this is a solution that's designed around truly understanding the needs for them. I remember I was working with this B2B business and we really pushed the Stripe API to do all these complicated things, and we built this hub, and it was imagine if Xero had just done it for us. And it does now. So I think, it's amazing to see open banking being used for what it was truly designed for. It wasn't designed for simple aggregation. It wasn't designed for simple payments. It was designed for services precisely like this. So it's exciting to see where you guys have got to and what comes next, I think.
Yes, and we've had sort of embedded payments as a buzzword for a really long time, and it's not obvious what that's meant. And here, what you have is the small business user logs on to their accountancy platform, and there's a pay now button that connects to their bank account. Their money is still being kept in NatWest, nice and safely and securely, or in Barclays or all other banks being equally good or bad. And they can just pay really conveniently without having to upload a wallet. So it's a bit of a no-brainer that was always going to happen.
Yeah, Ralph, if I may, but first of all, congratulations to you and the whole team. I think it is actually a great development because it is really a step towards liberalizing payments, because what you made an excellent point there. These SMEs, they're incredibly busy. They have very small teams that are focused on the survival of the business. There are no payment experts. There are no regulatory experts. So I guess we have seen within the larger corporates, because at OpenPayd we focus on B2B, but really larger corporates, we have seen an awful lot of, I guess, growing awareness around moving away from the card rails and looking for alternatives in the eyes of bank transfers and open banking and virtual IBANs to actually rationalize that payments experience and rationalize the cost and the operational burden behind it. But when you think about an SME, they don't necessarily have the manpower or the resources to do that. So I think that the partnership that you're going for there is really great, because you are bringing that next level of embedded payments to the wider market and driving that mass adoption.
I think one of the things that really stands out for me at the moment, we've always had this sort of rhetoric that we've seen an enormous amount of digital disruption and innovation in the retail space, and then at the sort of the sort of very micro single director side of sort of SME, I think fintechs like Tide, that sort of thing. But I think actually we're starting to see quite a lot of innovation now in even sort of moving beyond that sort of just the single director as it starts to get a little bit more complicated. We had a story on the news a couple of weeks ago where even the likes of Oak North are starting to move into that space. But then equally, people that we traditionally wouldn't have considered financial services providers, right? Like the ePOS terminal providers, the supply chain providers that have access to all of this great information, whether it's how quickly they tend to pay their suppliers, whether it's all of the information that's going through terminals, they can make better lending decisions or whatever that is, right? So it feels to me like actually there's an awful lot of innovation going on at that level on the SME side. I'm quite optimistic about where SME financing and the payment side and all of that goes from here. Ralph, I'm guessing you're biased. You know, you're probably quite bullish on this SME space as well. It'd be great to get a sense of how the funding is going to be put to use and sort of how you expand the offering out from here.
I think the SME space, and we're really talking about small businesses, they're the 99% of businesses that probably have 5 employees or less. And I think historically people have been very scared about trying to approach them because they're super busy. They probably have some kind of technology phobia. They're really hard to approach. You haven't got an obvious buyer. There's not like a financial director that you can call up and you can sell the product to. If you've got consumers, you can go around a university campus, you can get them to download your app in seconds and they'll play with it. But I think they are that sleeping giant that is sort of waking, like ready to wake up. And when we look at a lot of the financial services products, the ingredients have stayed the same for 30 years. People maybe kind of change the ratios of the ingredients, but the product is pretty similar. Like Revolut is great, but it's another bank, or a coal-colored card is a different type of card to an Amex card or whatever it may be, but it's still the same product. Open banking is a new ingredient. So suddenly we can make dishes that were not there yesterday. And I think so our total addressable market has suddenly increased significantly. And that's where we can approach the SME with a product that yesterday was not available, and then they have all sorts of reasons to start using cloud accounting, and we can kind of, I see ourselves as trying to do what PayPal did with eBay or what Stripe did with Shopify.
I guess open banking, it shifts potentially the distribution model, but it also as well maybe changes the cost model. I think part of the issue that banks have always had in terms of making this work, and Iana, it'd be great to get your thoughts on this, is a lot of these small businesses, the 99% that Ralph mentions, they're not turning huge profits. So it's kind of hard to make that model work, and then all of the challenges that you referenced around sort of distribution. Does open banking start to change the game there as well?
Oh, frankly, I think it's a really difficult question. I come at it from the payment initiation part of open banking. And unfortunately, I believe that we are still at the very, very early stages of adoption of at least the payment initiation part. And a big part of that, a big problem for that is making the business model work, as you say. because I think the way to think about it is you have to add that cost on top of the bank transfer cost. Now, when you compare that to the traditional card rail, I think that makes an awful lot of sense. And we have, as a business, managed to save 3 to 4 times the cost of payment processing for customers of ours when we compare it to the card rail. But the open banking payment initiation on its own, if you had to decouple it from the bank transfer and price it separately, is, I believe, still a big challenge. And I think this is why we see many of the open banking providers, in particular the ones in the UK, really struggling to get to a profitable position, simply because the business model on its own is not necessarily viable just yet. And I believe that we do actually need to make new dishes, to use Ralph's expression, to be able to actually create a new, more justified business model around it.
Yeah. No, I think that's a really neat point. I'm gonna end this segment. I'm gonna move us on. I think it's, Iana, to steal your phrase again, I think we are at the very beginning, but Ralph, it's incredibly exciting. Reiterate the other panelists, congratulations, and it's one that we'll be keen to see where you guys go from here. All right, so we're just going to take a quick pause here, and we'll be back with you very shortly.
We all know SMEs are the backbone of any economy, so why are they still so underserved? 67% of them globally say fighting for survival is their top challenge. It's time for financial services to put its cape on. At 11FS Ventures, we're building, researching, strategizing, designing, and engineering game-changing propositions with banks and fintechs to better serve the SME market. We've already helped RBS better serve small business owners and sole traders by bringing metal to life. So, the question is, what do you want us to help make a reality for you? Let us know at 11fs.com/ventures. That's 11fs.com/ventures.
Welcome back. Before we get back into the second half of the news, a note to go check out our most recent Fintech Insider Insight show. David Embrier, our CEO here at 11FS, is joined by some excellent guests from Clio, Merantix, and Public to discuss 1 year of ChatGPT. They talk about the impact ChatGPT has had on us all in such a short space of time, as well as its use cases in banking and the future of AI in our industry. And will the recent headlines have any long-term repercussions for OpenAI? And what does that mean for you and I? So go check out that episode in our podcast feed. It's the one just below this. Now let's get back into the news. Our next story comes from Financial News with the headline, Revolut bring bond trading to millions of European customers. The new fixed income trading feature will be rolled out to customers in the European Economic Area. It means those with access can begin trading government and corporate bonds through the Revolut app. This new service will sit within Revolut's wealth business, which already offers stocks, commodities, and crypto trading. Rolandis Utica, CEO of Revolut Securities Europe, noted the growing appeal of the bond market driven by high interest rates. Quote, for US dollar bonds, the usual minimum required amount is around $100,000. We are reducing that minimum amount significantly to offer that from €100, he said. So Revolut is the first UK headquartered fintech to launch this service. Iana, maybe I'll come to you first on this one. What was your reaction when you read this story?
Oh, interesting one. Because Ralph said earlier, Revolut is just another bank. And you know, it does make me wonder, is Revolut just another bank? To me, it seems interesting because it seems like it's the first European fintech or European bank that is pursuing a true super app strategy. Now, I'm not saying that this is going to be an absolute success and that is, launching a new product or service every 3 weeks is the way to go about it. But I do believe that it is interesting that they are following in the footsteps of other super apps. I think it's a great development. from a consumer standpoint because the bond market was historically out of reach. And if I think about all the pressures on consumers at this point in time, the rising costs of living and rising inflation, if you are going to give access to trading opportunities, should this be just trading crypto, or should you enable access to much safer investments in the bond market? So from my perspective, this is really a great development, and I'd be interested to see the uptake in the coming days and months.
Interesting. I think I find it hard to think about Revolut and anything that Revolut does outside of everything that they're trying to do with getting a UK banking license and the struggles that they've had there, right? And Rachel, I mean, it'd be good to get your thoughts. I'm going to take a slightly probably antagonistic position to Iana in that we know that like high 90% of like retail day traders lose money. They're betting against the house. They don't have Bloomberg terminals. And I just wonder how much of what Revolut is doing in terms of its product development strategy, which has always struck me as throwing mud against the wall and seeing what sticks, and then if it doesn't work, we'll get rid of it and we'll throw something else. But obviously when you're talking about commodities and crypto trading and all of that sort of stuff, how does that look to a regulator?
Yeah, I'm always in two minds about Revolut. I used to be super like, I just didn't think without the banking license that they could really push it into something that would be a profitable business venture. Obviously, I've been proved significantly wrong. But I think what they have done, and we were talking about this earlier, Iana, it's like, you know, if you think about super apps, you think of Grab, which is not just banking, it's everything. And we were talking earlier, it's more like a financial services super app where it's all of the things that you need around finances. Then it begs the question, as a consumer, what kind of things do you need about finances? What Revolut have done, which I think they've done very well, is the tiered services. So, for example, this isn't sitting in your bog standard, here's my bank, and here I'm transferring to my friend and splitting bills. This is sitting in their trading ecosystem, also under a subscription. So I believe this will form part of their Trading Pro subscription. So this is showing the difference between entry level versus more sophisticated services. That said, does it have a place in the consumer ecosystem? Interesting, because, you know, interest rates mean that the bond market is actually quite favorable right now. People are struggling, cost of living crisis. Maybe people do want to try weird stuff. Should you be trying financial weird stuff with Revolut? I'm still not super convinced. They have a beautifully designed app. It's so intuitive. They've got some interesting and innovative services there. But I personally would want that protection of my assets before I went in. Ralph, you might have some thoughts.
No, I think I agree with a lot. The product velocity at Revolut is insane. Like, they're great at it. And they are probably the one anomaly of a financial services company that has scaled internationally. I don't think this will move the needle for them at all. I think fintechs make money via three ways: lending, FX, and interchange. And that's not going to change. And I would agree, it's not a very libertarian thought, but I don't think probably people should be able to buy bonds. The fact that, you know, active hedge funds and asset managers have had their business models attacked and their fees reduced because the thought is that despite their years of experience and expensive educations, a monkey is better at picking stocks than they are. We probably shouldn't be encouraging day-to-day trading, which is more akin to gambling. But I understand that's a very paternalistic, inappropriate thought.
Iana, go ahead.
Ralph, I think you are absolutely right, but equally, I guess my argument there is that day-to-day trading is already happening for retail consumers, and therefore it's much better that it is taking place in a regulated environment and that they are given access to, I guess, options, lower risk options than, for example, Bitcoin or digital asset, or for example, just digital assets. I guess the point I'm trying to make is that day-to-day trading is already happening for retail customers, and my argument there is it should, if it is already taking place, it's much better if it takes place in a regulated environment, and it's much better to give customers a broader choice of assets with a varied risk profile than the really high risk digital assets that have, as we have seen, ended in tears for many retail investors. So that's the only argument that I have in favor of that.
Someone told me about this, about Revolut, because we were talking about the banking license earlier. And I thought it was quite a good observation, because we see it quite a lot in the UK, that it's a lot easier to get a banking license before you launch than after you launch. And a company like Revolut has launched so successfully with so many customers that I'm sure there's various reasons why they can't get the banking license. But I thought that was likely a decent contributing factor.
Yeah, look, I think you're right. I'm sure that it absolutely is. And of course, look, Starling decided to wait until they could launch a full service current account before they came to market. Monzo, of course, took a slightly different approach and then had to migrate customers over. I think it's an astute point. I think Revolut in some ways are the victims of their own success. I think it's a double-edged sword. I think there's any number of ways where they haven't helped themselves, right? They've repeatedly filed their accounts late. Have incredibly high churn in senior roles that overlook risk and compliance and all of those sort of risk and control functions. And there's any number of things. But Iana, I really agree with your point that offering those less complex trading products, and of course, look, what we were saying, that they've taken that threshold down from $100,000 to €100, and the flip side of that is that they're actually democratizing access. It's hard not to think about this in the context of what we've previously seen with Robinhood, who also had a very intuitive app, and probably started off okay, but then we're offering access to increasingly complex trading processes and trading products like options tradings. And of course, we've seen the fallout there with suicides and all of that sort of stuff, where people were leveraged up to a point where they really shouldn't have been. So I guess, Rachel, just to close this one out, context is important, right? And how these things get delivered, and I suppose the sort of information and the education piece around it is as important as the sort of offering itself.
Yeah, 100%. And I feel like you often don't talk about Revolut. We're also talking about Monzo. They came out kind of the same time, and Monzo stepping into the investment space, but partnering with a very well-known provider. And we've spoken about the Monzo investment platform. It's not perhaps the best for returns, but they're tying that proposition so heavily with education. And I think that bonds are complex. They are, in theory, yes, you've got great returns, interest rates rising, like it feels like a good product to invest in, but do you truly understand what investing means? And like I said earlier, it's a cost of living crisis. People are looking for ways to get their money to stretch further. I think it's not as simple as offering a new product. It's everything that comes with that. And I would say that's the one thing perhaps we don't see as much from Revolut, is that education, easy, here's what that means and here's everything you need to know about it. And that's, I think, would NatWest offer a product like this? Perhaps not. And maybe that comes because they're highly regulated, but maybe that's for a reason. And I think that's the bit that not having that full banking license means, is that you don't have the regulated space to ensure that consumers are fully aware. And this is where something like consumer duty is super important. Do people fully understand what they're getting into? And with something like this being so easy, like, oh, just €100, I'll just pop that in there. Like, what does that actually mean in 3 months' time when you really need it back?
Right, because I think that's a key point, is as much as anything, it's about your own personal financial situation and are you set up and ready to invest?
But I mean, hopefully this is the point around having that distinction within the app. Is this just about trading, and is this just people who are cognizant of what they're stepping into, which you would hope? And then if it is, maybe this is a cool product for the people who are interested, who are educated and who are looking to advance within trading, as opposed to just betting on your regular finances.
All right. Excellent. I'm going to move us on. Our next story comes from FinExtra with the headline, Canadian Fintechs Demand Open Banking Regulation. So dozens of technology leaders in Canada have signed a letter coordinated by the Council of Canadian Innovators calling for a framework to regulate open banking. The letter stresses that, quote, the longer we wait to implement a secure 21st century financial system, the greater risks Canadians will be exposed to. This follows a campaign back in October to build public support for government action on open banking. Canada is not the only country lacking clear regulation on open banking. Others include Japan, India, and Singapore. The Consumer Financial Protection Bureau in the US recently proposed rules for an open banking framework, which is expected to come into law in late 2024, while the UK were pioneers of open banking regulations. So, Iana, it seems only sensible to come to you first on this one. What's your view? What's your take on this one?
I think it's a really interesting one because the more countries adopt open banking, the more pressure will mount on those that are lagging behind, goes without saying. And I think to really realize the potential of open banking, we need harmonization across borders. I think that's quite obvious. The UK had the first mover advantage with PSD2 in 2015, and clearly we now see that many of the big open banking firms, they're all UK based. But I think open banking as such, just going back to the point of risk and the absence of open banking infrastructure exposing everyone to greater risk. I think it's a really interesting point because the concept of dipping into the account of the user is not a new one. It's just that open banking is providing a safe, regulated, trustworthy technological solution of how to do that. Because screen scraping has been out there for a really, really long time. And just for our audience, what is screen scraping? Screen scraping is you simply giving away your bank account details to a third-party app to then log into your app, impersonating you and dipping into your balance. So the concept or the need for it is definitely not new. The concept is not new, but the reason why open banking is helping us manage that risk of fraud and consumer protection and impersonation, fraud and privacy is because it is delivered in a technologically sound and trustworthy way. So I can only welcome that, and I think it is really important for that mass adoption.
Yeah, I'm interested. I mean, there's no doubt at all that the UK had that first mover advantage, and then it's interesting to see what's happened since in markets like Brazil and India, and of course now they're sort of rethinking the open banking implementation entity and everything to sort of, have we started to fall behind? Do we need to push on and sort of accelerate and catch up with those other markets? Which I think is really interesting. It's interesting to think that we're in that phase of the product life cycle, I suppose. And then you look at markets like the US and Canada, and they're sort of so far behind, and they're just asking for it in the first place. Ralph, what was your sort of reaction to this story, I guess?
I think open banking is just going to happen. It's like cloud infrastructure. If we think about what a bank is, it's a stone temple on top of a mountain that looks after your valuables. You're just asking for an API to be attached to it. Everything else had had an API attached to it for 30 years. So it's unsurprising that the banks are the last people to adopt it. Whether it's market-led or regulatory-led will probably depend, market by market. But it really, I see it as a matter of when and not if, and everything in financial services takes much longer. Bill Gates had this great quote about technology, that it was overestimated in the short run and underestimated in the long run. And I think that would apply massively to open banking. What I like about the job that I have is that I know that the market is still going to be growing in 20 years' time. These governments are not going to move quickly, but that's okay. I still got time.
Yeah, I like that point. It was never going to be a one and done. I also really like your point about whether it's sort of market-led or regulatory-led. I suppose there's a question around whether open banking would have taken off in the way that it did in the UK were it not for the regulatory mandates. What do you think, Rach?
Yeah, we always talk about this with the regulation. Like, in theory, regulation should come first and pave the way for innovation, but that's not how regulators work right now. And, that we're seeing some differences here. Sama and Saudi, they are really pushing the boat out because the market is slightly more immature when it comes to fintech services available to consumers. But in places like the UK, fintechs charge ahead and regulation is like itching to catch up. And so I think when it first comes out, so when open banking was first released, like technically it was the beachhead or whatever you want to call it. But now it's kind of like, well, the regulators have to do it. They don't really have a choice, like what you said, Ralph. I think it's now looking away from when it comes to future innovations, then it's a question of like, what is the market saying and how do the regulators respond to it? Like with AI, we're not really seeing as much coming from the regulators yet. Will we see more of that as AI starts to integrate more into services? Do we see more of that in banking beyond just a really cool chatbot that looks at my finances and tells me X, Y, Z? Like, I think that's when regulation's interesting versus this is just, it's table stakes now to compete at this level. And I think it enables the cross-border capabilities that we were talking about earlier, which is more exciting about open banking. Right now, we see especially in the UK at least, we see domestic open banking really embedded into a lot of our services. What does that look like when you want to hop across and, for example, the Eurozone? What does that look like there?
Yeah. Why aren't we all banking in the metaverse, right?
Well, no, I don't want that.
Iana, coming back to your point earlier about this being a safe and secure alternative to something like screen scraping, with that in mind, how important do you think it is? And I suppose also scale, right? But how important do you think it is that this is mandated, that it is sort of regulator-led rather than market-led?
Oh, I don't think that we can separate the two. I don't think that we can look at it in isolation. I would like to believe in an ideal world that regulation follows societal developments. And I do firmly believe that it is market-led. It is led by the demand, going back to Ralph's points from earlier. It is led by the need of the SMEs. It is led by the need of companies to reduce the cost of payments, to improve the access to payments, to improve the payment operation lifecycle. So it is definitely driven by the market. But equally, we have to recognize that it is only when there is that collaboration between the private and the public sector that we can achieve the level of regulatory change, regulatory harmonization, and technological standardization that really paves the way for the next phase of innovation.
Yeah, and Ralph, I mean, final word to you on this one, I guess, in the spirit of sort of leapfrogging, if you were to look for a silver lining with the sort of US and Canada's position on open banking today, there's a lot that they can learn from the progress that other markets have made and the mistakes that they've made within that, right?
I think with the open banking, the common narrative is the banks have had their feet in the ground and they don't want to be moved and they're being pushed by the regulators. But a fun, hypothetical question is, if you're the CEO of a bank, where would you invest your resources today? And I think they're not going to build the next Stripe. They've lost that race. And they're probably not going to build the next mobile bank app like Revolut. They've lost that race. I think if they want to take the sort of first position, investing in the open banking APIs, it's a really good opportunity to be at the forefront of the next wave in sort of financial technology. So I think the common narrative is that you need regulation, but there's some really cool banks out there, for example, NatWest, that has the bank of APIs, that are seeing this as an opportunity to take first place.
All right. Now for Big Click Energy, a quick fire roundup of some more click-worthy news this week. Rachel, I think you've got our first one.
I do. The first one is US credit card company Petal is eyeing up a sale. So the New York startup secured $200 million of funding only 3 months ago, but is now looking to sell. It has been reported that the company is at risk of failing if it cannot find a buyer. Goldman Sachs is apparently involved in helping Petal with the sale, of which there are rumoured to be several interested parties, but it's currently unclear what this means for its 400,000 approved customers. I have to say, I was gutted when I read this because I feel like the US, and I mean lots of places, but the US specifically, are crying out for apps that are going to help people get back onto the credit-worthy scale. There's been so many stats around the disparity between minority groups getting access to credit and then finding ways to build credit, the fear of applying for credit. And the whole point of Petal was around no fee credit cards, starting to build your credit worthiness, and then in the future being able to look at more products like mortgages and whatnot. So I'm gutted to see that they are taking a downturn. Hopefully we'll start to see more of these popping up in the US, because the stats still seem pretty damning at the moment.
I need to crack credit score.
Yeah, they really do. And it was cool because it was all about algorithmic credit scoring, which, we talk a lot about it, but we haven't seen it brought into the mainstream. In the UK, we've started to see Experian doing a few bits and pieces around open banking, favorite, and how we can use transactional data to enhance the information and the decisions that we make on clients and customers. But I think in the US, because there's some of those services are still in their infancy, Petal were really leading the foreground. So yeah. Fingers crossed to them maybe not failing and someone
absolutely.
picking them up.
All right, our next one comes from Finextra with the headline, China gives the green light to Mastercard for domestic payment processing. So from social media and movies, China has been notoriously difficult in licensing overseas firms, and banking is certainly no exception. However, Mastercard has now secured formal approval to issue yuan-denominated bank cards in the country. The process has been a long one, with the People's Bank of China giving an agreement in principle back in 2020. Quote, Mastercard's deeper participation in the Chinese market will benefit the country, its consumers, and its businesses, while simultaneously connecting and powering an inclusive digital economy that benefits everyone. That's from Mastercard's CEO, Michael Maybach. Now, as the article quite rightly says, China's not always been an easy market to go in and do business, and certainly do business freely or in the way that we would sort of expect to be able to do it in the West. But look, it's one of those where I think the upside is obvious, right, when you start to think about numbers and volumes and all that sort of stuff. So I think it'll be an interesting one to see how it plays out. Definitely one that we'll keep an eye on. All right, now it's time for the and finally section of the show, a look at something more offbeat from the news this week. So this one comes from ATM Marketplace with a great headline. Dwayne "The Rock" Johnson partners with Acorns to launch a new debit card. So the actor and WWE wrestler has teamed up with US savings app Acorns to launch a brand new debit card. Made from tungsten, the Mighty Oak card includes a, quote, real-time roundup feature, which allows customers to round up purchases to the nearest dollar and save some extra cents. The card pays up to 5% interest and comes with a range of benefits, including a reward scheme, early paydays, and access to learning resources. Prices range from $3 to $9 per month. Rolf, I'll come to you first on this one. What do you think?
It's just another credit card. We've had these for like 10, 15, 20 years.
I know, but this one is The Rock.
It's an interesting one, because a credit card is part function and part fashion, like a pair of trainers or a T-shirt. And I always thought Monzo did something quite cool, because before that, the whole American Express was your card said how much money you made. And when you brought it out, it was a real status symbol. And then Monzo tapped into a different zeitgeist. This looks like we're going back the other way, but who knows?
I think what Monzo maybe realized that not many others realized before was that the card, you're so right, it wasn't just function. Actually, that was kind of one of your most regular touch points with your financial services provider, was when you took out your card. That's when you saw the logo, that's when you saw the brand. And then, of course, we've heard all of these anecdotes, right, about how in sort of like techie Shoreditch in the early days, it was a real sort of like, conversation starter in bars, and I think relationships have blossomed off the back of a conversation that started around a Monzo card. However, as an ex-Barclays alum, I want to, Rach, give credit to Barclays, because they had their personalized cards long before Monzo.
Thank you.
Right?
I was just about to say, we talk about all these status symbols. Could you get your face printed on your card with Monzo? No, you could not. But would your card weigh so much as the tungsten from Barclays? Perhaps not also.
The tungsten, for me, I mean, look, I've never been... Ralph, you're so right. I mean, part fashion. I've never heard it summed up quite so well. And absolutely, the metal card has been a selling point and people go in for it. I never have personally. Iana, what about you? I can see you shaking your head.
Call me old-fashioned, but I don't even see why is this newsworthy. I do not understand the people that carry a metal card in their wallet. I do not understand why I would have to pay $9 a month to get a card that weighs probably twice as much as everything else I hold in my wallet. So to me, it's a complete nonsense.
I have a small confession.
Oh, here we go.
So
honesty time.
I have a metal card.
You are a fan of The Rock, Rachel.
But no. Well, I am a fan of The Rock.
Who's not a fan of The Rock?
He was fantastic in Baywatch. But I will say the only reason I have the Monzo premium card is because my flatmate's phone got stolen and the police were like, oh, you didn't have insurance. That's smart. And that very minute, I went into the Monzo app and I got premium just so I had phone insurance. And now I have the card, and anytime like we're splitting a meal at the end of it and I like put my card out and everyone's like, ooh, and I'm like, it's just, it's now like it's gone the opposite way. It's not like a status symbol in a good way. Everyone's like, oh, she's got the bloody metal card, hasn't she? So yeah, I'm sorry.
For a Fintech podcast host, should you not be using Apple Pay or Google Pay? Like, what are you doing bringing out this card?
Listen, I want to be
item?
disconnected from my phone. Actually, I am the worst fintech person because outside of work, I'm like, put my phone away from me. I just want to read books.
No, but also, Ralph, I would say anecdotally, in the real world, you still need the cards. Actually, you still even need the cash. I can tell you, I was on my way out of Money 2020. I was leaving Money 2020. I missed my train to Paris, so I got on a regional train, and they said, if you cannot give us 40 euros I got on the train. I didn't have the right ticket though, because I missed the earlier one, and they said, if you do not have 40 euros in cash, you'll have to get off at the next stop somewhere in the middle of Belgium. So I was sitting there in between the two coaches with my big Money 2020 sign on my chest, speaker and everything, having talked about the revolution in digital payments for the last 3 days, and then being told I need to get off the train if I couldn't pay 40 euros. So yeah, the real world, Ralph.
Well, that's Holland for you.
So Ralph, I'm the archetype of what you were just describing. I only use my phone to the point where I flew to another country, didn't bring my wallet, and only realized that I didn't have my driving license when I was at the rental car checkout desk and they were refusing to give me a car.
Where did you fly without anything?
Because you can go with a phone and a passport, right?
Yeah, but like, when do you leave your house without your wallet? Always.
I never have my wallet. This is the point. It's a dangerous habit. Until they digitize everything that lives in your wallet, you're always going to need your wallet.
But also, it's just good practice.
On that note.
I think, Rachel, that's because they don't have handbags. That's why. I don't see Ross walking around with a handbag.
I don't have handbags. I seek coats with deep pockets just so I can put my tiny little card holder there, just so I feel secure. What you need is someone to buy you a nice card holder. If anyone's looking to get Ross Gallagher a present for Christmas, he's looking for a card holder.
Podcast at 11fs.com. All right, look, that wraps up this week's Fintech Insider. Thank you so much to today's guests. Guys, let's go around the room. Where can people find out a little bit more about you, a little bit more about your companies? Iana, let's start with you.
Go to openpayd.com and our LinkedIn page, and you'll find everything that you need about embedded payments and financial services.
Superb. Ralph, how about you?
Likewise, I think Crezco.com and our LinkedIn page.
Excellent. Rachel?
Find me on LinkedIn. I'm Rachel Pandyan.
Excellent. For information on 11FS, please check out 11fs.com. And as for me, I'm at Ross Gallagher 07, still, sadly, on X, formerly Twitter. I don't know when we have to stop doing the formerly Twitter bit, but they all still do it. So, all right, and thank you for listening. Join the conversation on social media or email podcasts@11fs.com. Thanks very much, and goodbye.